What's going on, guys? Welcome back to my channel. And if it's your first time here, thank you for joining us. I have a very special guest here today. I'm going to introduce him here shortly. However, what I want you to know before I do that is we're going to talk about a topic today that I actually know very little about. And I brought a subject matter expert in who has recently semi-retired himself from corporate life at 41 years old to go into business on his own to teach others about, can I have a drum roll? Bitcoin. And with me today, I have Omar. Say what's up, Omar.
Hey, everybody. How are you?
Before we get into everything, all that we ask you to do is hit that like button, subscribe, and turn on the notifications. This is going to be an action-packed episode. I'm going to get taught everything just like you're going to be taught everything about Bitcoin. And I brought my good friend, my buddy on the show, who is a subject matter expert. His name is Omar Sabek. Sabek. I knew I would fuck it up.
No, pretty close.
Also, you can cuss on this show.
Awesome. That's my deal.
Sabek.
Yeah.
Omar Sabek. And before I turn it over to you, let me just give everybody an introduction of Omar. Omar, at 41 years old, has semi-retired from, I would just say semi-retired, leaving the corporate world to go into business himself, developing Sasco
Digital Assets.
Sasco Digital Assets. Sometimes I can't even read my own handwriting, and I do apologize for that, guys. But opening Sasco Digital Assets, his consulting firm?
Yeah, education, advisory, support, and service. Yeah.
Firm to educate and help others arguably become wealthy by educating and investing for clients in Bitcoin. At 41 years old, through his investments in Bitcoin going back almost a decade.
To 2013, yeah, about 8 years, absolutely.
Yeah. So without further ado, I think I did the actual introduction correctly. Omar, what's going on, man?
It's good to be here.
Thank you.
Good to be here.
Thank you.
I met you a couple of weeks ago.
Mm-hmm.
We had dinner and a really good restaurant, by the way.
Yeah.
We had a really good meal there.
Where'd we go?
The Cast Iron Chef.
Cast Iron Chef. Shout out Attilio.
That was awesome.
Attilio, the owner, is one of my friends as well.
He knows what he's doing.
He's very, very good, isn't he?
Yeah, absolutely. And I'm big on kind of a carnivore diet, and they had an excellent meat menu. I think I had went for the filet mignon, which I don't typically do. Usually I go for the ribeye.
You had the full filet, 12 ounce, right?
I did,
yeah.
Yes. And it was tremendous. It was really good. It kind of reignited an urge to start cooking on cast iron in me. So I went out and I got this lodge. So I got this lodge, and now I have a nice collection of lodge, and now I actually have to start cooking on it. Yeah, it was really, really good. Thanks for taking me there.
Of course, absolutely. And it was recently my mother's birthday, so that's her favorite restaurant. That's the only place she wants to go for her birthday. And I took her there, and we also took one other person who will not come on microphone and will not go on camera. However, we might be able to get her to say something. Did you like it, Paola?
Me encantó.
This is English.
I really loved it. It was delicious. It was actually far the best steak I've ever had.
You know what's funny? The state of Connecticut actually says that Attilio is the second best steak in Connecticut. And I disagree. And I didn't meet Attilio until in 2018. We both, as owner-operators, took home the award from Hartford Current Best Of. So there's a local award for each county: Best of Fairfield, Best of New Haven, Best of Litchfield, Best of Hartford, so on and so forth. He took home Best Steakhouse of New Haven. I took home Best Gym of New Haven. And I have to put out that I was the first gym to take it away from the Edge in almost 2 decades.
Incredible.
And that was a great feat. But we met as Best Of owners. And we kind of just hit it off. And I should know the episode that he was on this show. However, he does a fantastic job. And the signature to how he actually serves his meats are, it's still cooking as it's brought out to you. So it's actually sizzling, and I think he uses olive oil. It might be olive or peanut. I don't claim to know. It's still actually cooking on the cast iron as it's brought out to you and when it's down in front of you, which is pretty cool, right?
Absolutely. It's one of those don't touch the hot plate kind of deals.
No, you don't want to touch it.
You know. And there's also a really good, do you mind if I do a little shout out for a place that I love to get my steak from? So in Fairfield, there's an area called the Brick Walk, and there is the Brick Walk Tavern in there. David Snyder is a chef. Amazing. You go over there, you get a ribeye for $2. And it's just insane. And I actually finished a ribeye for $2 myself. I loved it that much. I'm a big steak guy. I know a good steak when I see one. And at Tilio's, whatever you're doing over there, keep doing it. Yeah. Awesome.
Have you ever been to Gabriella's in Greenwich?
Gabriella's? No.
Savage steak. But they're not a steak house. Have you been?
No. You have to take me.
The host's salary is $250,000 a year.
The host's
salary.
Incredible.
So just the host of the restaurant is $250,000.
They're doing well.
They're doing very well. Yeah.
Probably a big hedge fundy kind of place.
I would say so.
Let's go there.
I mean, the first time.
Should we do it?
Oh, I am off for it.
Let's do it. We're doing it.
The interesting story, please. The first time I went there, the individual I went with had his hands kissed when we walked in. But it's a hell of a steak. It's a hell of a restaurant and has a great steak. And we went out to kind of meet because our mutual friend, who has also been on this show, Dr. Tar, connected us because he thought that we should discuss specifically life and Bitcoin. And we went out to kind of just meet each other, have some drinks, have some great food, so on and so forth. And we hit it off really well. And now we're here. And what you're going to do today is you're not only going to teach me, but you're going to teach the entire audience about Bitcoin from the perspective of how it's changed your life and how it can change others' lives.
Yeah.
So I'm really, really looking forward to this, guys. And I think it's important to point out that I actually don't know. And I should preference with, I get asked about how to invest and how much I've invested in Bitcoin at least once a week, right? And I always say the same thing. I don't understand it, which means I haven't invested in it, and I'm not going to tell you to invest in it. Because I don't believe that I can give financial advice that I know nothing about. Now, if it's on different topics, like maybe a little real estate, watches, so on and so forth, investing in yourself, I'm comfortable giving that kind of advice because I'm proven and I have a track record in it. When it comes to this, I know nothing about it, so you're educating me as a 3-year-old child, if that's okay.
Yeah, of course. And I think the nice thing about you is that you are, totally open to learning about it. But also, I'm meeting you on your level of knowledge, and we're going to take you from there. And what I hope we do is any question you have, there's no question that is, too simple, or there's no bad question. So I hope we, if we have to do more
part 2 and 3,
I really enjoy educating people on Bitcoin. I've been studying it for years. I literally spend at least an hour or 2 every day just focused on, what's happening and doing what's called chain analytics to see how Bitcoin is moving between
market analysis.
Market analysis is definitely, it's all about narratives and perceptions and capital inflows coming into the market. But one of the nice things about Bitcoin is that, and we're going to get into this, but one of the nice things about Bitcoin is it's a public blockchain. So I can just download it. I can bring it into my computer. I can use graphing software to determine trends. There's companies that do this now. There's a company called Glassnode you can make an account for. You can sign up for. And what they'll do is they'll visualize aspects of the blockchain so you can see, for example, the hash power and how many wallets have been created. But you can also get really deep and see exactly what's happening with all sorts of metrics across the blockchain, and that helps inform my investment strategy. It tells me when to, when we're going to go into a bull market or when we're going to go into a bear market, or if we're in a bull market, when we're going to have corrections, and you can use that to, kind of manage your investment. So it's hugely, that's very unique to Bitcoin. I don't think there's any other asset that you can do that with. And there's other attributes that Bitcoin has that makes it just an incredible investment. So we're going to talk about it.
Yeah, so what the fuck is Bitcoin? like everybody, I think, is familiar with the word at this point, But if you can explain what it is for me, I think it would really help me try to conceptualize the concept.
Absolutely. So I'm going to talk about Bitcoin from two perspectives. First one is it's a network. It's a monetary network. So you have a peer-to-peer network of individuals that have Bitcoin, that own Bitcoin, that are able to, without going through any third party, transact that Bitcoin. Okay, so think of it as value that can be spent over the internet, over a network. And that's revolutionary because there's real significant engineering problems that Bitcoin solves. Bitcoin is a monetary network. It is completely decentralized, which is super important. Not only is it decentralized, but it's engineered to always ensure that no particular party can take control of the network. And that is what makes Bitcoin really revolutionary. There's no figurehead. It's what we call non-sovereign, so it's not backed by any nation state. It's purely backed by the consensus of the participants on the network. So it has the same kind of value as gold. Anyone that holds Bitcoin, an investor, or you could call them a saver. Anyone that holds Bitcoin is participating in a network. There's multiple ways to participate. You can mine for Bitcoin, which is the process of creating new supply of Bitcoin.
Right, that's what I was trying to link you up with my buddy about.
Yes. So that was interesting. He had a property, and it was in an area where energy was
very cheap,
and he was looking for potentially, mining operators to come into the property and build out a mining facility.
He's getting $600K on that deal, by the way.
It's amazing. That's amazing.
It's pretty good for him.
Yeah, absolutely. And mining is, mining is a business.
Yeah.
And there's a lot of dynamics to mining, but typically, there's really two ways to get Bitcoin. You could mine for it, or you could just buy it on the market. You could go to an exchange like Coinbase, which is going to IPO tomorrow. There's other exchanges that you can use and buy the Bitcoin. And what you'll see is a lot of Bitcoiners, they kind of do the kind of mental, the kind of risk-reward equation on, should I invest in the mining equipment and the location and the energy to mine the Bitcoin myself, or is it more, is it a better investment strategy to just buy it? Being in Connecticut where energy rates are high, that the energy that's required to power the miner probably not as good as where your buddy's located. I think that was in Ohio.
Yes, EverSource is probably not ideal for that situation.
Exactly. Where it is ideal are places where obviously energy is cheap, and those places are typically where energy is not close to municipalities, where there's more demand. So what we see right now is a trend where miners are opening up in areas where there's trapped energy, like natural gas wells in the middle of nowhere, and they'll set up a mining shed right on it and uplink to a satellite and just start mining for Bitcoin. Pretty incredible.
Would that also be maybe a third world country where it might be cheaper to have energy?
Absolutely.
Yeah.
Absolutely.
So there's mining in that area?
Yeah, I think, if we kind of zoom out and we take a broad view, ultimately Bitcoin doesn't care where the energy is coming from. It's going to produce, it requires energy to operate the miners. The miners what produces the energy. But if we really think big picture here, the trend is towards for miners to seek out sustainable, renewable resources of energy, which over time are the cheapest forms of energy. So I think there's a big debate right now in the community, not in the Bitcoin community, but outside the Bitcoin community, as to whether Bitcoin is kind of energy efficient, but if you really do the work and you really understand how the economic incentives come to play and the arc of energy production through time, we're right now on the cusp of moving from non-sustainable sources to more green sources. And Bitcoin is part of that transition to green sources.
Especially with Musk pushing green. I mean, he's a pretty big figurehead.
Big time, for sure.
And he supports Bitcoin.
Supports Bitcoin. You just put it on the balance sheet. Yeah, that's a big deal.
And you could buy his Teslas with it.
You could buy his Teslas now with it, absolutely.
And I don't want to derail, however, I did have a question from that explanation. When you say decentralized currency, is that the correct way of saying it?
Yeah, you can say decentralized currency.
When you say decentralized, can you expand on what decentralized means?
Absolutely. So no aspect of the network, if it were to be attacked, would affect the network in a catastrophic way. Okay. So if you think of the internet is decentralized. The internet is an open, permissionless. You don't have to ask anyone for permission to get onto the internet. You just get kind of a hookup and you're able to freely browse the internet as long as no one, obviously people in China can't say the same thing, but
or North Korea,
totalitarian states don't like free, open, decentralized.
What? There's things happening outside of this country?
So if you take that concept where you can openly browse the internet, the internet's really made of switches, routers, servers, highly resilient. They can withstand multiple failures. It's actually, the internet was a DARPA project that was developed to ensure that communications can continue if there was a nuclear war. So it was designed to be decentralized where there's no single point of failure. So that if nodes on a network go out, data can still route around that kind of a situation. And Bitcoin is no different. Bitcoin is designed to be absolutely resilient. Not only resilient, and I know you said we're not going to get into politics, but politics is a big deal because if Bitcoin is seen as a threat, it absolutely needs to be resilient.
We could totally get into politics.
Yeah.
I was just trying to articulate that, politics, in my opinion, or at least from my limited understanding, might have a lesser play into Bitcoin than, say, other topics that we discuss here. I could be wrong.
Well, I think if we're going to get really deep into it, we do talk about some, we really talk about values more than politics. Values and politics kind of go hand in hand. One of the things that makes Bitcoin unique is that it's absolutely scarce. There's nothing that was ever absolutely scarce before Bitcoin came around, right? If you think of anything, you could always produce more of it, right? I've struggled to think of anything that is absolutely scarce, except for maybe art. So art is absolutely scarce. There's only one Mona Lisa.
What about yes, I'm sorry, go continue.
Right?
Yeah.
There's only one Mona Lisa.
I was going to say common sense is a bit scarce these days.
You can argue that.
So Mona Lisa, common sense. Yeah, got it.
So what are the kind of downsides to both the Mona Lisa and common sense?
Scarcity.
It's not easily transferable. So it makes for a poor currency. It makes for a poor money. Right?
Okay.
So because Bitcoin is very easily transferable, because it's scarce, because it's fungible, right? Fungibility is, if I put a bunch of different gold bars on a table, right, and they're all the same weight, and we all want to get out of here, we just grab a gold bar. We don't care which one we grab because they're all the same. Same thing with a dollar bill. Same thing with pencils. They're fungible, right? Mm-hmm. As long as the pencils are the same size, right? Mm-hmm. So fungibility is really important for a money to have. It's an important property for money to have. The visibility. Okay. The visibility is also important. So Bitcoin can be divided into 100 million units, right? No different than taking $1 and turning it into 100 pennies. So the visibility and the idea that you can break it down into subunits is really important for our money to have. So Bitcoin has all those qualities. So that's what makes it a really superior money. And I'm saying money, and I'm not saying currency for a reason, because those are two separate things, right? Currencies should be designed, like US dollar is an amazing currency because it's super easy, right? You can, it's instantly recognizable. You can spend it freely. It's taken everywhere in the world, right? It's designed to flow very freely. What it's terrible at is storing value. And it's terrible at storing value because it's designed to be inflated over time. So if, everyone knows that like $1 in the early 1900s could buy you way more than $1 today.
Would that be because of it's not decentralized?
It's because it's provided by the central bank, the Federal Reserve.
Which would be central.
It's central.
Opposed to decentralized.
Exactly. It's central, but one step further is that it has a monetary policy that makes it not scarce. So the monetary policy behind it, if you look at what the central bank's mandate is, their mandate is low unemployment, managed interest rates, and they're taking on some new mandates now. But generally speaking, they're really in charge of keeping unemployment low so that they can promote a strong economy. They promote a strong economy by printing more dollars to give to businesses so that they can invest in workforce. And we should probably get into this, but what we're seeing right now is they're printing more money, and the money is having unintended consequences, which is leading people to seek out investments. It's not just Bitcoin that people are seeking out. They're buying homes. They're buying luxury watches.
Buying cars.
They're buying collectible cars, collectible sports memorabilia. So it's all this general trend, and you can argue, okay, is it the fear of inflation that's making people buy these assets and driving up those prices?
Or availability.
Or is it becoming more scarce because people are buying more of them? Yeah, or the supply chain issue. Exactly. I think you hit the nail right on the head. And that's actually what the Federal Reserve would argue is the reason why prices are increasing right now. If you listen to what Jerome Powell said on 60 Minutes on Sunday, he said, just the economy's opening back up. There's bottlenecks in the system. There's some supply issues. But there's also, the counter argument, and there's evidence to suggest that, we are seeing the beginning of inflation. 30% or 30 to 40% of all dollars in existence was printed last year, for very good reason. But again, just the nature of, anything that people hold that, let's say today, if tomorrow the supply increases tremendously without a corresponding increase in demand, it just means that the value of that will come down. That's just simple economics.
And I think, and correct me if I'm wrong, what you're discussing is what the general public is starting to see or understand. Well before the general public sees it on the news and starts to understand this concept of inflation and what's happening, and 30% of the dollar has been printed in 2020 or 2021 is basically what you're saying. The individuals, and you can't really say individuals, it's not just the Rothschild family, okay? The centralized bank is a component of, 170 banks or something along those lines?
Central bank, there's one central bank in the United States, it's the Federal Reserve, but you also have other central banks, Bank of Japan, ECB.
How many banks make up the Federal Reserve, though?
There's 12, they call them kind of like regional banks.
Okay.
So, and you see it when you look at your dollar, and you see that, I think B might be for New York. That's a New York federal, or F is for New York, and A, they all correspond to different. And what those banks are responsible for is collecting economic data within their jurisdiction that informs the policies for the central banks.
So I could be not articulating it in proper terms. However, there's those 12 banks that make up the Federal Reserve. However, there's subsidiaries of those banks, maybe smaller banks.
Yes,
or
member banks.
So I think the number is like 170 or something along those lines. I could be wrong. But the point is, the decision makers of the Federal Reserve that have been behind these decisions know the long-term effects and forecast and project how the inflation will look in 30 years, which many people don't know. A lot happens within a generation, okay? A generation, for instance, my generation as a millennial, you're technically an Xer, right?
I would say actually there's a new name for a Zennial, so we're between
Yes,
X and
I'm a Zennial.
Yeah,
You're a Zennial?
1979. Yeah.
So I think it's 75 to 85 is a Zillennial. However, I refer to myself as a millennial because I think it's funny, because I'm totally not.
What year were you born?
85.
85. Oh, you're
I'm right on the cusp.
Yeah. Oh, so what is the millennial start after 85?
There's contradicting reports. It's 80 to 99 or something along those lines for the millennial. But now that there's the Zillennial, which is 75 to 85, I also fall into that.
That's so funny.
Okay.
You're like a senior millennial.
Yeah, I'm like the top of the millennials. All right. So, but anyways, the point is, countries and huge decisions are made on the 30-year context of within this generation, this is what's going to happen. So, for instance, Paola's kids, your kids, maybe the viewers' kids that are, say, under 10 years old, are going to piggyback this inflation for the rest of their lives. Their generation, our generation, most people in our generations are just understanding this concept, don't realize that we're going to watch what plays out over the next 30 years. And I know I'm kind of digressing, but the point that I'm getting at is the decision maker is not just the Rothschilds in that family, but the decision makers of the Federal Reserve knew what is going to happen, know what's going to happen, and forecasted that over the next 20 to 50 years, per se. And everyone's just understanding what's happening right now. Do you see what I'm getting at?
I would argue that there's definitely a rising of consciousness that's happening now, but I would argue that that's been happening since probably 2008. You saw Occupy Wall Street, you saw Tea Party, you saw a rise of consciousness around just money printing, right? Because what got us out of the 2008 crisis was an incredible amount of money printing to bail out the banks that were responsible for, poor risk management controls that put us into that crisis.
Yeah. Right.
And look, Bitcoin was created in 2009.
Right.
I would say, and I think most people that really understand Bitcoin would say it was a political statement. If you look at the Genesis block, which is the first block mined in Bitcoin, in there is the headline from the Financial Times of the day. And the headline was "Chancellor on the brink of second bailout for banks." I think, if we were... if you're a true kind of like an Austrian economic kind of thinker and, you believe in sound money and you may say, okay, the first bailout was probably needed because if we didn't have a bailout, I mean, the situation is dire.
Yeah,
and I'm not
you can't let the banks collapse.
You can't let the banks collapse. We don't know what the other side of that looks like. With the second bailout, okay, so maybe now we're starting a trend, and a trend could be dangerous for society. So I'm of the camp that believe that Satoshi Nakamoto, who
I remember you telling me about him.
Yeah, so he is
Japanese.
He, she, it could be a team, could be a group of people. We don't know. Definitely anonymous. Just use the name. Doesn't necessarily mean that they're Japanese. If you look at their writings, his writing. Or her writings are, tend to use like English spelling, color, COLOUR, so you see some examples of that.
Traditional English.
Could be trying to throw people off. We don't really know. Traditional kind of UK English. They included that statement in the Genesis block.
It's like their disclaimer.
It's a political statement to say, hey, Chancellor on brink of second bailout for banks. Instead of trusting and putting your faith and your hope into central bank backed currencies, which we call fiat currencies. Here is something that is an alternative to that. It's a non-sovereign, peer-to-peer, decentralized digital asset that is able to effectively, take a level of control away. That is definitely a political statement. Take a level of control away from central banking, and and it's so far successful, right? I mean, you do see it from the beginning, and it goes without saying the difficulty of creating a project like that is successful under optimal conditions, because it's very easy to have a figurehead. Right? For people, when they think of, people make the mistake of, is Bitcoin a company? Is it a stock? Am I buying into it? Who runs it?
Right. Can I buy it on my TD Ameritrade?
Exactly. Yeah. And look, I think gold is a great analogy, because if you think about gold, who's the CEO of gold? Nobody, right? Gold has been used for 5,000 years by humanity. It's, humans have just tried to figure out what is the best thing that can hold my value, my labor, my, whatever I worked hard for, over space and over time. And humanity, through a natural process, triangulated onto gold. And I think we're seeing that now with Bitcoin.
Yeah, I think gold is considered the first global currency to a degree, right? In the sense that everybody recognized it.
Absolutely.
Like, I don't know about 5,000 years ago, but at least 2,000 years ago. I mean, even before quote unquote Christ. And now you're saying that Bitcoin is kind of the newer aspect of a global currency.
I think gold is always going to have a place as a store of value for certain types of people in the physical world, people that don't necessarily live in the digital world. But you know as well as I do, the trends are that it's not like people are saying, I'm not going to use the internet anymore. I'm not going to, everything's going online. Everything is, cyber.
They also think the government is the reason why Facebook is doing what they're doing when it comes to privacy terms. When in reality, Facebook's not a private company. It's public. However, it's a private organization and can do whatever the fuck they want with your information.
Right. And Facebook, if the government deems at any point in time that Facebook or Twitter is so powerful that they need to do something about it, you can't do it with Bitcoin because it's decentralized. You can't ban Bitcoin. Bitcoin can't be banned. Just like gold really can't be banned. So the parallels between gold and Bitcoin are apparent, and you can always use analogies between gold and Bitcoin, even mining dynamics. Gold is just a physical form of something that's scarce, and Bitcoin is a physical form of something that's even more scarce.
Tangible and intangible.
Bitcoin is a virtual form of something that's more scarce. It exists online.
Yeah.
And it is very tangible.
Is it?
Absolutely. It's very tangible. When I have my Bitcoin and I secure my Bitcoin with a private key, it's my Bitcoin. I'm securing it with a private key. It's my Bitcoin. I know it's there. Actually, I would say it's the most tangible thing ever because it's backed by math. I can give you something called, there's a USB device called it's made by a company called CoinKite. You can put Bitcoin on there. If I put one Bitcoin on there and I give it to you, you can plug it into your computer. You can verify that it has one Bitcoin. You can spend it from there if you want. If you kind of, pop a tab, you can spend it from there. But it's instantly verifiable. That USB stick becomes a bearer instrument, like no different than an ounce of gold. The value is on that stick.
I see.
That's a physical form.
That's considered tangible.
Very dangerous because if you lose that, you're done. You lost your Bitcoin.
Oh.
Right? So the better way to do it is to have something called a hardware wallet, and there's a whole security framework around that I'm absolutely going to show you and spend time,
And before we get into security of Bitcoin, which we are going to discuss, I think we should discuss what the definition of money. If we're done with what a Bitcoin is.
Sure.
Are we done with what a Bitcoin is?
And we're always going to come back to it.
Okay, good. So yeah, because I'm still trying to understand everything. And some people listening might understand it. However, I'm learning right now, and it's like information overload. I thought Bitcoin was intangible because it's in the cloud. However, you're telling me it's not.
Bitcoin is, so my definition of tangible is something that I can interact with. Doesn't necessarily need to be in a physical form. I can put it into a physical form if I wanted to. It has some security risks. But let's talk about the definition of money. So the definition of money, my definition of money is something that holds value over time and space really well, right? And depending on where you are in the world, you might have different definitions, different perspectives. One probably extreme example is if you're in jail, money becomes, how many movies you watch where they're trading cigarettes is money, because that's the currency within the prison system in some cases. In Latin America, right, I don't know if you can tell us, Paolo, but in Colombia, people add additions to their homes.
Yes.
And they add those additions to their homes because they want to pass it down to the next generation. It's a way for them to take their wealth, hire some labor, get some materials, put an addition on their home, and then their home becomes more valuable. And it can't be seized. That's why they do it, because there's been through the years, a lot of situations, political situations, where wealth has been seized. And so they've acclimated to that, and they've worked around that by, adding to their home. So they're putting their money in their home, and that's their way of transferring value from, between individuals. If they can sell their house one day, Problem with having a house as money is it takes 45 days to go into it, 45 days to go out of it. You got to pay, a lawyer, you got to pay for all these things. So it's a terrible form of money, but the
not
society,
to mention
taxes,
yeah.
Absolutely. Which is, you're always going to pay taxes. That's, when Uncle Sam or Uncle Samuel, when they come knocking.
What do they call it, Paolo?
El presidente.
Is that what it is?
El presidente?
El presidente. El presidente.
I was imagining something like Mr. Nino or something like that, no?
No.
Okay.
Mr. Nino. No.
In North Korea, what's the money there? Bags of rice, right?
Mm-hmm.
So it's very interesting. We are very lucky. 13% of the world population live in liberal democracies where property rights are respected. So as part of my work, I used to travel around the world, and I would meet different people, and I would talk to them about their experience. And if the topic of money ever came up, it was very interesting to understand how their culture viewed money. Because really, how cultures view money is an outcrop from their experience, their shared experience. So, if you think of global, gold was popular in Western Europe. Gold, the probably golden age for gold was, during the Dutch golden age, 17th century. And you have a society that was backed by gold, it was on the gold standard. You had societies that were backed by gold all the way up until the early 20th century. Actually, I'm sorry. It was still backed by gold in 1913 when the Federal Reserve Bank was created. But over time, in 1971, Richard Nixon made the informed decision from his economic advisors to remove the U.S. dollar from the gold standard. And when the U.S. dollar was no longer backed by gold, it turned into the situation where we see today, where they can make more U.S. dollars to, the reason why they do it is ultimately because when you take debt, if you're a company that takes debt, right, and you have a debt load that needs to be paid off, you have to pay back the nominal amount on that debt. If you, like my father bought a house in 1980, he paid round number $100,000.
I was going to say 70 grand, yeah.
Now it's worth a lot more, right? At the end of his 30-year mortgage term, he was paying $300 a month because the value of the dollar had debased that much. So he was able to afford to continue paying off his debt because he had the help from the Federal Reserve because they were debasing the currency that he was paying back in. So USD is a terrible form of money, amazing currency. It's a terrible form of money because it doesn't hold value over time. So people that hold their wealth, I mean, I grew up, in an era, in the 1980s where my parents were still giving some great advice. Put your money in the bank, save the money, get the interest off of it. The interest back then, at one point, it peaked to 20%.
There was 20% returns on a savings account?
There was 20. I need to go back and look, but there were definitely 20% mortgages at some point in the 1980s.
Oh, absolutely.
And but I remember my first knowledge was like 96 when I had a savings account, and it was, I believe, 8% in 96.
Wow.
So I would, if I had $100 in the bank at the end of the year, I'd have $108.
Right.
And I remember the first time I asked my mom, I said, how come they're giving me money? What's up with that? And she was like, oh yeah, that's interest. And I was like, wait a second, interest? So that's my first, kind of understanding of, how kind of.
Interest in your favor.
Very interesting. Yeah. Oh yeah. Yeah, absolutely. Absolutely. That's where it was. Now, today, what is it down to?
Right. 0.03.
You have $100 in your bank account by the end of the year. They're probably, if they're not taking the fees, if it's not gone because it's below whatever the standard minimum amount is, then you're probably getting $1.80, right?
Yeah, exactly.
Crazy.
Exactly. So early on, it piqued your interest on leveraging money in some way.
Yeah,
interest, compounding interest, even if it's annual.
Yeah, absolutely. Taught me that you can have an asset that gets yield, and obviously the U.S. dollar became a terrible place for yield over the years, but the concept is very important, and so compare that to Bitcoin, right? So if you were to buy Bitcoin today, okay, you're buying a deflationary asset. Okay, that's an asset that is designed to get harder and harder over time. Okay, so it deflates over time. So if you denominate yourself in Bitcoin, prices aren't going up; they're going down. Right? One Bitcoin in 2013, when it was $200, could, fill up your shopping cart with some, everything you need for the week, maybe 2 weeks, right?
Sure.
How much is one Bitcoin going to buy you today when it's...
Was it 64 grand?
63,000 this morning?
Yeah.
Could buy you, probably buy you a Model 3 Tesla.
Could buy you a Tesla, yeah, definitely.
It could buy you some, it could buy you food for a very long time.
Buy you a down payment on a $300,000 house.
Absolutely. And the thing that people need to realize is that this will never stop. I mean, that's the key. Will you see it go into bear markets? Potentially, but is it designed to continue to do this over time? Absolutely. When you're comparing it to the US dollar. If you're comparing it to other assets, right, it's still going to beat all the other assets. I mean, it has. It's the fastest horse. Bitcoin is the best investment. 200% CAGR, compound annual growth rate. That's 200% every year, year over year.
Right.
And we're going to continue to see. We're probably not going to see 200% every year, but it should decline. But it's something that is actually literally engineered to take over the monetary system. When you say,
clearly we're going to go into a bear market, but when you say that specifically with Bitcoin, what do you mean by we'll see Bitcoin going into a bear market?
So we have, in Bitcoin, there's, I need to talk a little bit about something called the block reward. Okay, and this has to do with mining. So if you're a miner, you're setting up a computer, and I'm just going to make it very simple. That computer is solving cryptographic problems, and in exchange for solving those cryptographic problems, it's securing the network, securing the transactions, and the reward is the Bitcoin network would give you some Bitcoin. Okay, so in the first 4 years of Bitcoin, it would give you, for every block, you hear the term blockchain, very simple. The Bitcoin blockchain is just a series of blocks. We're up to 670,000 blocks, some odd, since that first Genesis block.
Wow.
Over, since 2009. Each block that's mined gets a reward from the Bitcoin network. In the first 4 years, that reward was 50 Bitcoins.
I remember you were telling me about this at dinner.
Yeah. And then in 2012, there was something called a halving. Okay. And this is something that happens every 4 years. In 2012, the block reward went from 50 to 25. Okay. And what happens when that happens is there's less supply that gets, created into existence by the miners. As a result of less supply, all you need is the demand to stay the same, or even increase a little bit, right? But if it just stays the same, as long as it doesn't go down, if the demand is just constant, then what's going to happen to the price? It's going to go up.
It's going to continue to go up.
Because the supply just got hardened.
Right.
2016, another halving. This time, 25, right? Cut that in half. What do you have, 12.5?
Mm-hmm.
May 2020, so last year, 2020, we had our last halving, and the new block reward is 6.25, and in 2024, it's going to be 3.125. And in
so it's going
to keep going and keep going up until the year 2140.
Up.
It's going to keep going down.
Down, correct.
The block reward. So
more blocks, less
about this,
reward.
Yeah, conceptually thinking about this,
okay.
Bitcoin is going to get harder and harder and harder and harder. It's going to be more attractive as money over time. I believe in the next halving, it becomes more scarce than gold from purely a stock to flow perspective.
Yeah.
Right. And I'll talk about stock to flow and what that means. But because it gets harder and harder over time, price naturally goes up. And so, yeah, do we have a bear market? Does it go down? Yeah. But if you look at the bear markets, the price never goes down below the previous, like the all-time high of the previous cycle. So even like when we're talking about this cycle right now, price is at 60,000. If it runs up over, people are talking about, I think definitely 100,000 easy. If it goes up to 200, 300,000, when it comes back down, it's probably not even going to come back down to 60,000. It's probably going to come back down to 90,000. There's also a view now that we're entering a new wave of adoption and consciousness about Bitcoin. And there's been so many people that looked at it between 2017 and 2020 that are now saying, okay, now that we Bitcoin overtook the all-time high of the previous cycle. That happened in December 2020 when the price went above 20,000. Right, that was a high watermark from 2017. So we had a bear market from 2017 up until, kind of like December 2020.
Right.
A lot of people that were against Bitcoin didn't understand or said, how could it be? They saw that happen. And now they see the price at 60,000 and they're saying, you know what, I was wrong. I was actually wrong. I didn't think about it the right way. I'm educating myself now and they're getting into it. And so that's what happens with Bitcoin is you understand it. Maybe you hold it a little bit. You see the value go up. You want to understand it a little more. It strengthens your conviction. You naturally want to tell all your friends about it. And that's how adoption happens.
Mm-hmm.
Just like when you got your first iPhone and or any cool technology, and you tell everybody about it, and so we're seeing that this wave of adoption is so big that, and the financial institutions, everyone, literally, if you look at a lot of job postings right now, a lot of financial companies won't hire you unless you have some level of crypto, blockchain, Bitcoin experience. Time Magazine put out an ad for a CFO saying you got to be Bitcoin friendly, you got to understand Bitcoin, and they just announced that they're buying Bitcoin. That happened just like this morning. So. And then what happens when it happens? You have financialization of the asset. You have services. You can use Bitcoin as collateral and take loans on it. And because now you can use Bitcoin as collateral and take loans on it, or you can put Bitcoin in an account and gain interest on it, then do you really need to sell it? Mm-hmm. And if you don't have to sell it, is there going to be another bear market? We don't know. So there's this idea that maybe we're entering a new realm, a new phase for Bitcoin, where we're not going to have a bear market. We're going to have it's quote unquote being called the super cycle, where Bitcoin elevates itself to a new plane of existence, like a new phase, a new, kind of like when ice turns into water, turns into gas, like a new phase transition. That'll be very interesting to see. Will it play itself out? That's what makes Bitcoin exciting, is, looking at the trends and following it. And, but to a certain degree, you also got to feel like, when you talk about the chain analytics and you bring in a narrative and you see what the US dollar is doing, you kind of get the sense that you're kind of on a highway and these are all like the road signs are just passing by, because everything that you expect to happen in adoption is actually happening. And so that just strengthens, Bitcoiners' conviction in it as an investment asset.
Wow. So, all right, let me unpack this a little bit. You're basically talking about the life cycle of Bitcoin in a very layman's terms since its existence of 2009, if I'm not mistaken, post the last economic recession.
Yeah.
Okay. Which it sounds like it kind of was left the door open for to kind of come into being. And with that said, I know you told me, I think a couple times now, that you didn't get in 2009. However, because of your background, you in which I'll let you explain, because of your background in working and so on and so forth, you were aware of it, Bitcoin. And if I remember correctly, you told me that you didn't actually get involved with Bitcoin on the investment aspect of things until 2013.
Correct.
For someone who might be aware of what Bitcoin is, let's say today, and is interested in buying Bitcoin, and maybe they think it's too late, because it's $3,000?
$63,000.
Yeah, $63,000. When you found Bitcoin, I'm trying to compare it, right?
Yeah.
When you found Bitcoin, it was how much? Less than $100?
$34.
$34, and you bought in at over $500?
I kept on buying. Yeah, so my first Bitcoin was $34 in 2013.
Oh, it was $34?
Yeah, 2011 is when I first heard of it,
okay.
But I kind of almost instantly kind of dismissed it because I didn't really know what it was. I thought it was actually something like funny money for certain websites on the internet, where, like the Silk Road, which was probably, unfortunately a major use case for Bitcoin, illicit kind of marketplace. So I thought it was kind of like the equivalent of if you go into an arcade and you get their funny money and
right.
You can only use it in the arcade. I didn't really, there wasn't a lot of content. There wasn't a lot of education. So I just heard of it. I looked at it real quick. I was just like, oh, that's pretty cool. That's interesting. I didn't realize it was like the soundest, hardest money at that time, for sure. But then in 2013, I bought some. I needed some. I was buying services in the Netherlands, like server services, and their preferred method of payment was Bitcoin. So I said, okay, let me go get some Bitcoin. And I paid off the invoice, and I had some change left over, some Bitcoin change left over. And then I forgot about it. And then a couple of months later, I went back into that account for some reason. I don't remember why. And I saw that the US dollar value of that Bitcoin like doubled. And I said to myself, what's going on here? You mean to tell me that like I had like illustratively, let's say $200, equivalent back in, March, and now it's worth 400? Like I gotta understand, what this is. So that's when I really started, I read the Bitcoin white paper, which is Satoshi Nakamoto's white paper. I also had, this understanding of money from just my own kind of curiosity. So I researched it. I read a great book about the Federal Reserve called The Creature from Jekyll Island. I've always just been interested in economics. I was working in fintech, so I was already in the financial world at that time. My background is engineering, technology. From a very early age, I've been, working with technology, and later on, obviously, more formally in my career. So I was kind of predisposed with understanding, decentralized concepts of decentralized. We have these kind of problems of distributed computing power in the industry that I'm in. And, these are real problems that we have to deal with. And so I had that kind of mindset when I looked at Bitcoin, and I realized that it was, I actually realized back then that it was an institutional grade asset. And now institutions in 2021 are realizing the same, which is pretty kind of cool, right? I mean, you can't really, there's not a lot of assets. I've tried. I can't think of any opportunity where normal people had an opportunity to buy into the asset before Wall Street did, and like kind of there's no commodity you could think of, nothing really fits that bill. Bitcoin is big, and that's the other nice thing about Bitcoin today is that you can still buy it. You know that the banks are getting into it. We see every day new headlines of, Goldman Sachs is doing this, Deutsche Bank is doing that. They're all poisoning themselves right now. They're all positioning themselves to really get into the space. They're going to buy it. They are buying the Bitcoin. If you look at the amount of Bitcoin that's on the exchanges from this year compared to last year, it's like it's a sharp decrease. So I think we're in the final kind of days of. You can always buy Bitcoin; it's always going to go up. But I think at the price that it's a steal right now. It's an incredible steal. And we're going to follow up in a couple of months, and you'll be able to kind of put me to task on these statements, which I'm looking forward to.
Yeah, and I think time yields all answers, right? So that being said, you found Bitcoin in 2013. You invested in it just out of basically necessity at that point, right? The company in Norway.
Yeah. I bought. That's how I was. I was forced to kind of buy it.
Right.
I had to pay them Bitcoin. Yeah, absolutely. But I didn't invest. I didn't invest until I did the education, and I think that's a key kind of point to make, right?
Well, I'm sure you probably caught a flag, and not in this case, not a red flag.
Right.
A green flag.
Yes.
You're like, holy shit, my 200 is now 400 in the period of X amount of months. So is that where your education began?
That's where my education began, and the most important thing was securing it, because it's something that resides on your computer, something that resides on the internet, could be hacked, could be stolen. I have 100% faith in Bitcoin as a protocol that it can't be hacked, but I don't have faith in myself that I'm going to be able to protect my own Bitcoin. So I had to really kind of create a security policy for my being, so that when I was buying the Bitcoin, I could make sure that nobody would be able to kind of do anything to me to get my Bitcoin from me. So I focused a lot of education there. I focused education on, is this what could go wrong? Like back then there were no other altcoins, right? Bitcoin is the immaculate conception of the blockchain. Everything you see after that is a copy. In some cases they Control-C, Control-V and created your own coin. Ethereum is unique. It's called proof of stake. It's a different kind of algorithm. But I was there when it was just Bitcoin. And, there's been times where you wonder, is this going to be something that is going to ultimately succeed? Or is it, you doubt yourself, right? And which is healthy. You always have to kind of doubt your intuitions and your, inferences that you're making. But yeah, I mean, the doubt is what really forced me to, educate. That was a fire, because ultimately any doubt it needs to be dispositioned in either a positive way or a negative way. And, if there's doubts in a negative way, that's risk. And, that would inform my kind of investment strategy.
So exactly. So since 2013 of your first initial flag to fast forward to 8 years, you've been able to, you could retire fully if you wanted to. However, you don't want to.
No. But
you were able to retire yourself from corporate salaried work to come into your own business to teach others.
Yeah, I had an amazing career. I traveled around the world. I supported the biggest banks, the biggest financial institutions in the world. And what I did in my previous role, I had a global team of 85 people, amazing people, really talented professionals. It is my dream. It was my dream career. And I stepped away from that because, I could. And I feel like what attracted me to what I was doing, it was very much, we were selling peer-to-peer technology to financial institutions. And I loved the human. So it's telephones, it's communications, it's how traders communicate with one another. And I was originally attracted to voice communications, telephony, voice over IP, because it was the first peer-to-peer interaction of the human voice. And I'm going back to like 2003, when voice really started to become packetized. And I built a career on that. And found Bitcoin, and Bitcoin is like an elevation of that, because it's the peer-to-peer transaction of value between people. And I think that's profound. The idea that we, for the first time in human history, have the ability to transfer value to one another without any counterparty being involved in that transaction over incredibly long distances. You can't do that with anything else. You can send a wire to another part of the world, but you got to go through your bank. You got to go through a third party. And if I get it, you can do this on the internet, and program it means that it's limitless, the opportunity here. And it's just the only other time we've ever seen anything like that was the creation of the internet, which is purely limitless. And we see what that's led us to. So, it's very attractive. And I think 2021, 2020, post-COVID, just made a lot of sense for me to, really invest my time and energy. At the end of the day, you realize that your number one asset is time, and where am I going to focus my time? And it just made, all the markers were there. It made a lot of sense for me to kind of, and the idea that I could help people, and I was helping people, and I still do. So I've even when I was working, I had some clients, I had people at my job that are probably going to retire. They're not going to be very happy with me at my previous company, because there's a couple of people that I've been helping with Bitcoin that are probably they're going to retire early, because they the gratefulness that came back to me, that energy,
isn't it the best?
It was, you can't put a dollar on it.
I was having this discussion last night with one of my friends about the gratitude that comes from watching people grow and fulfill themselves. You honestly can't put
it's the most meaningful thing.
Of course, if someone was like, "Oh, I'll give you 5 Bitcoins for it," I'd be like, "Yeah, sure." However, that feeling, right, is uncomparable when it comes to money.
No,
there's no money that matters. It's that fulfilling feeling, and that's because you're a teacher. And being a teacher, I understand that, right? And and that explanation that you discussed when it came to your career, I think, is excellent. But what I'm trying to forecast is, you invested in 2013. Here we are in 2021. Now we don't have to put the numerical values on the gain or the profit. However, I'm trying to forecast that you have invested on your own to get yourself to the point to where you can leave your job, right? So whether you're comfortable saying or not, it sounds like it's in the realm of maybe 7 to 8 figures of ability that you created, so you can do this on your own.
Well, you also have to make sure that you can withstand the unknowns. So you got to kind of forecast your what your lifestyle, what kind of life you want to provide for your family, and make the right kind of determination. And I was able to do that, and that's huge. But anybody can do it, really. what I advise my clients that want to do the same thing is just a couple of best practices. I used to actually say before the last halving, I said, don't put in any more money than you can afford to lose. I don't say that anymore. I say now, think of it like a very high-tech superior savings account. What you would have put into savings, instead of putting that in your bank account, just buy Bitcoin with it. And what's nice about that, if you incorporate what's called the DCA strategy, which stands for dollar cost averaging, you're able to ride up and down. As Bitcoin goes up and down, you're able to, over time, convert into Bitcoin, and it's a way of managing the volatility of Bitcoin. And when we talk about it's not the volatility of Bitcoin per se, it's the volatility of the pair between USD and Bitcoin. One day, Bitcoin is going to be very, low volatility because it's going to have a lot more liquidity. It's going to be, it's going to be more widely adopted. But until then, I mean, if you see that the price drops and did I make the right decision? Did I make the wrong decision? Probably because you're probably too heavily invested and you take some money off the table so you can go to sleep at night. But if people think about it as a savings account, I think what happens then, they buy a little bit. And just like I said, right, you buy a little bit, you see it go up, maybe you see it go down, don't sell it, educate yourself, understand it, see it go up, get more conviction, do some more education.
Well, this is a long-term hold.
It's absolutely, and that's key.
This is not day trading
rich quick scheme,
right? No,
by any means.
Well, first things first, let's just debunk that. Okay, let's debunk that. I grew up poor. It sounds like you grew up humbly as well, correct?
Yeah, absolutely.
To create wealth, or if you want to use the terms rich, which I don't really care for, however, that's just my opinion, it's a long-term game.
100%.
It's a long-term game. There are quick ways of doing it. However, if you're not in it for the long term, okay, you're not going to be aligned to understanding how to manage that wealth. Okay, so there's a statistic out there, and I don't know the actual number. However, the majority of people that win the lotto are back to exactly where they were within 5 years because they're not aligned to being wealthy or understand money. So Bitcoin is a long-term hold.
Absolutely.
But I think the biggest question is, and I think we agree upon that, becoming wealthy takes time.
Low time preference is absolutely key. No question about it. Easy come, easy go, as they say, right? Those lottery winners, easy come, easy go. If you don't build the muscle to lift that big weight, I'm using a gym reference, right?
Yeah.
Hurt yourself.
Yeah.
So absolutely, you're spot on. Spot on.
Right, and you can't have a lot of. All right, so Omar, you have at 41 years old financially made enough money, which sounds like to be an incredible amount, able to announce your retirement, to focus on not only your family, but educating others on how they too can become financially free through Bitcoin.
Yeah.
So in we're talking about investments in the sense of, putting away X amount of dollars a month in an investment portfolio or in a savings account or something along those lines. My biggest question to you is, let's say that I don't have $63,000 to buy a complete Bitcoin. Okay. Are there any options for like a guy like me? Let's say my monthly savings budget is, maybe I allocate $1,000 a month to put into savings, or I put 20% of my net income into savings. Let's say it's $1,000 for investments, and I just dump it into my Ameritrade and I throw shit against the wall and see where it sticks. Can a guy like me that only has $1,000 a month for investments, because that's my budget, can I get into Bitcoin buying on a monthly basis?
Yeah, absolutely. And this is where, the parallel to gold comes into, it's apparent because, look, gold, we could talk about gold in ounces, we could talk about gold as gold bars. What's one gold bar? Last time I looked it up, it was 500,000?
Oh, one gold bar.
Okay. Massive gold bar.
Not a whatever the other one is.
So if people look at that gold bar, how can I ever afford one?
Right.
But you could buy an ounce for $1,200, whatever, $1,800, what is it, $1,500
Yeah,
now?
I thought it was 15,
whatever it is.
yeah.
Same concept, right? So you could buy Satoshis. So what's a Satoshi? Remember I said before, one Bitcoin has 100 million units?
Yeah.
Each one of those units is called a Satoshi. But, just to make it very simple, you got $1,000 a month. The question you want to ask yourself is, do you want to do one buy every month? Do you want to do 4 buys of $250 each week? The more granular you get, the more buys you're doing, the more you're going to take advantage of the dollar cost averaging effect of smoothing out your investment over time. So that's what I would kind of recommend. But yeah, you can buy those Satoshis. And pretty much every exchange now allows you to do what's called a recurring buy. So you can just go on there, set up your bank account, link your bank account to the exchange, create a recurring buy. In your case, let's say you were going to go in there and say you want it to be weekly. You select weekly. In some of the cases, you could do daily. So you could select weekly, you could do monthly. And then you would say $250 per week, and you'll get a text notification every time there's a buy that occurs, and you'll go in there and you'll see. It will show you that the price of the day, how much of that, how many Satoshis you bought at that price point of that day. And you don't even need $1,000. You can do it with, some exchanges allow you to do it with like a minimum transaction of $10. So,
for a Bitcoin?
$10 and you get, the equivalent amount of Satoshis.
Piece of Satoshi?
Yeah.
So you could, theoretically, you can invest in Bitcoin with as little as $10.
Yeah. And right now, $1, I want to say $1 gets you 1,900 or 1,800 Satoshis. So, over time, I remember $1 got you way more than that, right?
Right.
So over time, those Satoshis become more valuable. And if you keep these on your account, you'll see that value going up over time or going down over time if there's a correction. Usually it's a correction, but if you zoom out, there's a graphic, there's a graph of Bitcoin historical, performance. And there's a measure called the 200 SMA, and it stands for the 200 Stochastic moving average. And all it means, it sounds fancy, all it means is that they took the price of Bitcoin over a 200-week period and they plotted it. So if you're zooming out that much, 200 weeks is like 4 years. Sure. If you're zooming out that much, no one ever held Bitcoin for more than 3.5 years and lost money. If you bought at the top of the cycle in 2017 and you held it 3.5 years later or 3 years later to December 2020, you were in the green.
So theoretically, and I don't mean to interrupt, a lot of people might think that it's topped out now, which you're saying it's not, because it's, even though it's heavy at $63,000, which is probably a large amount of money to most people, right, in America, because 70-80% of Americans don't even have $500 in their savings account. But anyways, the point is, if theoretically you're saying if I bought in right now, 3 to 4 years from now, it will be more. Yeah,
let's say you bought in, I'm going to use rounder numbers.
Sure.
Okay, so let's say you bought in and the price was $50,000 and you said, you know what, too expensive, but I'm going to buy anyway. Let's say you buy a tenth of that. Right? Let's say you buy $5,000. So the price of a Bitcoin is $5,000. You buy a tenth for $5,000, right? If the price of Bitcoin becomes $500,000 per Bitcoin, 1/10 of that is going to be $50,000. And people that have invested long enough see this effect, and it's not an effect, obviously. It's just it's like slicing a pizza.
And this is going back to the whole, and this is exactly the whole pie to a slice. This is going back to the aspect of long-term investment, long-term hold.
Absolutely, long time preference.
Don't look at this like quick get rich quick.
Yeah,
look at this as long-term. Take your time. And would you recommend? You were going to say something?
No, I was just going to reinforce what you're saying. The key is if you really educate yourself, you're going to come to the conclusion that this is something that is being widely adopted. Actually, the adoption rate of Bitcoin is faster than the internet. You're going to see the prevailing narratives around you. You're going to see what the U.S. dollar is doing, and you're going to say, there's only one way for this thing to go over time. And you're not going to see it go up every single day, or even every single week. Right. If you zoom out, you're going to far enough, you're going to see that it's going to go up over time, and that's the kind of view. To your point,
right?
Keep a low time frame. It's a long-term game. It's a long-term kind of wealth creation strategy.
Right.
But I would say it's the lowest risk. And I know this is controversial. I know people, they're going to think I'm nuts, but I believe Bitcoin is the most conservative investment that anyone can make. It's very conservative. But that comes from a real understanding and a real investment into education.
Right, and your track record should prove, considering what you've done in 8 years, that what you say is true when it comes to it.
Yeah, and I wasn't always 100% into Bitcoin. I mean, so pre-COVID, I actually, because I have a family and I have to be responsible, so I was diversified.
Responsibility. Okay, got it.
Heading risk. What if I'm totally wrong about this Bitcoin, or what if it turns out to be a disaster? But I was actually being kept up at night, not because of my Bitcoin investment. I was more concerned about the state of the general economy. And so I made the decision last year to get out of my equities, get out of my stocks. The thing is about stocks is you're putting trust in corporate boards, in management organizations that are made up of people. And people are great, but they're not infallible, and they make mistakes, and they're not used to dealing with situations like we had when an economy was shut down.
Yeah.
So I didn't know what to expect. That uncertainty kept me up at night. So I made the decision, instead of selling it and putting it into U.S. dollars, which I knew that the Fed was already talking about, they're going to have to do something to backstop the economy. So now U.S. dollars was in the place to put it. I put it into Bitcoin. It ended up being, price went down to a low at 4,000. And I'm never trying to time it. That's another thing that you don't want to do. You want to establish what's happening and gain some conviction before you make a move, and also time that move and structure that move. But I made the decision at that point to, unversify, if that's a word, or diversify.
Exactly. Not be diversified.
Yeah.
Which is what I am.
Yeah, which is smart.
Right.
I just see Bitcoin as being a unprecedented, it's not even once in a lifetime, it's once in humanity opportunity right now.
And it's funny you say that because, one of the great, I would consider him one of the great financial teachers of our times, would be Warren Buffett. And what he is known for is many things, to include one of his statements, which is never put all your eggs in one basket financially. However, you're proposing that because of the validity of basically the entire world and how Bitcoin has virtually positioned itself in layman's terms against what's happening, that putting all your eggs in one basket is what you did.
Yeah, that comes from, again, I don't recommend anybody do that unless they do their own education, do their own research, come up with a conviction. They have to come to that. Otherwise, you're doing it and you're not building that foundation that we spoke about earlier of really, questioning yourself and playing through failure scenarios and other types of scenarios and game theory, historical kind of, what is this? People say history doesn't repeat itself, but it does rhyme, right? You hear that.
Yeah.
Does that resonate? Does one person's understanding of history jive with what we're seeing today? When we have these kind of situations that we're dealing with in the economy? And understanding what happened in history is, I think, very important. So it's a lot of work. It's a lot of education. But you come to the end of that, and that's, either one or two things are going to happen. Or maybe even three things. You invest everything, you invest nothing, or you invest in between.
Yeah.
Right? And, that's, I think, what I've seen is with the people that I've worked with and helped over the years is they start very small. They experiment, they understand it, and they eventually get more convicted over time.
So that's what I'm going to do, right? And, my intention in coming into this interview was to understand it at least to a degree, to be able to feel comfortable to where I could put X amount of dollars into it, which would, in comparison to how much a Bitcoin cost, would be small. And then as time moves on, I can actually watch the growth rate. Yeah. And when it's your money involved, or was your money involved, depending on how you look at it, I think you're going to pay a little bit more attention to
100%. That's the whole thing.
What's happening. Exactly. So,
I see a world-class Bitcoiner in your future.
World-class. Very good. So I'll be buying some, what is it? Not shiitakes. I'm thinking mushrooms.
Satoshis. Satoshis. We're going to get you some Satoshis.
Yeah, some Satoshis. And,
Before I leave today, you're going to have some Satoshis. I'm going to give you some.
Oh, I don't have...
Well, we're going to get you set up.
Okay.
I got everything you need. You're all set. You're all set.
All right. Well, before I get all fucking giddy over here, was there anything else that you wanted to touch on prior to leaving today?
So I'll talk a little bit about what we're doing at Satoshi Digital Assets.
Yeah, please.
So we're creating a platform. Really, if you think about it, there's a lot of interest in Bitcoin. There's a lot of interest in learning Bitcoin. So we want to educate and create world-class Bitcoiners at scale. We're going to be doing something called a master class, where it's going to be me teaching people about Bitcoin. We're also doing one-on-one with clients, so people can come into our website and buy time, and they can speak to me, and they can get an understanding. And we're also going to have subscription packages that give you discounts on workshops and training. It's really all about education. So that's Satoshi Digital. We have a Facebook page. And we also have a website, sascodigital.com, that we're still working on, but at least you can get an idea of what we're doing there. And I'm also on Twitter at Osabek. You can also follow me on Instagram, or follow Satoshi Digital Assets, I should say, on Instagram. And we also have a Fairfield County Bitcoin discussion group that has a lot of people that are interested in learning, so you can join that group as well.
Including me.
Yeah, absolutely.
Yeah. So they know where to find you. So let's just recap that. If they want to get a hold of you, where do they find you?
They can go to sascodigital.com, and all the links will be on the bottom for all of our other social. So we're going to have, I have a Twitter. We have a Twitter for Satoshi Digital, Instagram, YouTube, you name it, Facebook group. But if they go to sascodigital.com, they'll be able to see it all.
And this isn't a matter of, the ability is there if someone wants to work with you, but the premise to the majority of your content, if not all, is just education. You just want to teach people.
I just want to teach people. As a matter of fact, the education is going to be completely free.
Right.
So you come into the website, you sign up, and you're going to have you think master class. You're going to be taught by me, and all completely free. And if you want to take it to the next level, and you want to learn more, then we'll work with you. But I'm a huge believer in free education, because everything that I've ever learned about, not only about Bitcoin, but everything that I've ever learned in my life that put me in a position in my career to make money, I've learned for free as well. Security, cryptography, technology, SIP, communications, networking, Cisco switches, like all that stuff. I was able to go out and buy the equipment that I needed and put the time and the investment to learn, self-learn, and I think it's really important. I think we want to create a space where people can come and learn on their own, and we want it to be incredibly interactive, because I think it's a very important tool that people can use to grow their wealth over time.
It's very humble and it's very giving, which, as you mentioned, the most valuable asset that we all have isn't Bitcoin; it's time. And you're giving, and would you agree to that, right?
100%.
And you're giving your time to educate for free, which I not only do, but I respect greatly. So make sure you guys check Omar out. And, before we sign off for the day, is there anything you want to say?
No, just thank you for listening. And I'm sure there's going to be a lot more, we want to hear from you. If you're listening to this and you have questions, how would they be able to kind of comment on this? Is there a place that they can go?
Yeah, so what we'll do is we'll have all your links in the show notes for both podcast and YouTube, which they can go directly to you. And, if you wanted to jump on any of the comments on YouTube, you're more than welcome to.
I guess I'll see you guys there.
Yeah, absolutely. And, okay, so Omar, thank you so much for being here, gracing YouTube with your education and knowledge. It was absolutely, I would say, mind-blowing, because I really didn't know much. And now I would say I'm at least familiar with the topic. So thank you for giving me your time, giving us your time. Guys, if you learned anything from Omar, okay, check out his links in the show notes. Follow him. You don't have to hire him. It's not a matter of hiring anybody. He's putting out free education. Make sure you guys check him out and like this video. When you like this video, YouTube sends it out to everybody. I think there's more people that definitely need to understand Bitcoin. I understand it. You understand it. Hit that like button. And I thank you guys for investing in yourself and your time. We'll catch you next week.